Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. He's speaking to us from Virginia. Welcome back to the show, Mike.
Oh, it's great to talk with you. There's always something happening, it seems, whenever we get together.
Oh, yeah, they're all very aware of our show coming up, so why not give them something to talk about? Today, it looks like the NASDAQ is taking a big whack.
Yeah, it is. It's not too shocking. In February, in March, it pulled back a little over 10%. And we saw a similar pullback last year, right after Labor Day, in fact, in September. And it appears it's repeating again. The NASDAQ, as we're speaking, is down 2.5% for today. I'm really targeting the 200-day moving average as a likely bottoming point for what I think is a correction, another 10% decline. The VIX, last time, that's the volatility index, measures the premiums that people pay for puts on the S&P 500. It got to 32 when things fell in March. It's likely to get above 30 again. And if it does, I think that could be a point if people are interested in trying to buy the NASDAQ. I would wait for that. Basically, looking at a decline to the March low, basically, and maybe a little bit below it, and then a rally back up. But what happened in February and March is that while the NASDAQ pulled back over 10%, the S&P 500 and the Dow really didn't decline at all, or not much. I think it was about 5% for the S&P 500. And there were some sectors that actually went up. For example, the REIT sector advanced during that NASDAQ decline. So did the banking sector. So one way one could view this, and this is how CNBC will describe it, is that this is a great rotation out of highly valued technology stocks that went up tremendously last year into sectors and other stocks that are perceived to be the beneficiaries or will benefit more from the virus situation fading, the economy going a little bit back to normal as people venture outside and travel, go to the stores, and so forth. However, I think there is truth to that. I don't, no doubt. But I think it's important to look at another factor behind this, which is probably just as important or more important, and that is massive speculation has been going on in the financial markets since last April with the rise of the Robinhood trader and new people getting into the markets for the very first time with a gambler's type of mentality. I was talking with a friend of mine today about how things are even different than they were in 2000 and in the late 90s when I got in, and the day traders were on the rise. The people today, many of them seem to think that the financial markets are a way that they can turn $10,000 into $1 million or something overnight. The people that promote cryptocurrencies tend to talk that way. If you recall, 2017, people were saying Bitcoin's going to go to $1 million. There's a man on CNBC, in fact, that was saying these things, and it was all over Twitter and social media. And this sort of mentality has infected, I would say, a segment of people in the financial markets. They're going on margin. They're going into calls, short-term calls, which tend to be extremely risky, and they're going into cryptocurrencies, which are basically extremely speculative. And it's not simply Bitcoin, but a whole slew of them out there. I just to mention a few, and this is what's the size of the cryptocurrency market. Even if you are out, I'm skeptical of Bitcoin, but let's say for the listener hearing us that okay, it is the future. Well, or it's going to be good or whatever, and it's not just a speculation. Well, inside the cryptocurrency market, there's many things that are so silly that there's no other way to look at it. For example, Dogecoin, and there's a $34 billion market cap on that. There's another coin called Pancake Swap with $4 billion, Sushi Swap with $1 billion, Pancake Bunny, Meme, Turtle Coin, Burger Swap, Dracula Token, and on and on and on. This is what the cryptocurrency market is about. There's no value in these things. It's all, people, they talk like people are buying these as a safe haven. Well, when the NASDAQ pulls back, Bitcoin falls. There's no safe haven in cryptocurrency. All it is an instrument of extreme speculation. And that's okay. If you can time the moves, that's good too. But it's nothing that is a real long-term investment. The point of this is that this is a big segment of the trading public that's gotten into these things, just as there's people that are going on margin or went on margin and all kinds, buying stocks without any clue of what the valuations are and just chasing prices. And this sort of activity reached an extreme in January and February. The margin debt levels hit an entire record. And it's that sort of thing that causes pullbacks that can be sharp and sudden in the financial markets. When you have people on margin, then you have a market that is susceptible to fast declines. That's what we saw in February and March, and I believe that's what we're seeing now. So the things that are declining the most, it's not simply people selling to move money into so-called real stocks, but there's people on leverage in these markets in extremely risky things, and they're the ones that are getting smashed and causing declines to pick up in speed. I think this one has only begun. It may end by the time we talk again, but I don't think it's going to be a one-day affair. Most of these things take a couple weeks to play out. So I think that's what we're facing. It's not the end of the world. I mean, if the S&P 500 falls to, let's say, 4,000 and the NASDAQ to 12,500, it's not a big deal, but it is. But there will be people wiped out that are on margin, and a lot of people killed in these really strange crypto coins.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, when the whole pandemic thing started and casinos were shut down, you said a lot of the people who normally would have gone to casinos to bet on sports or to gamble personally got into the stock market. Are they going to get out now the casinos are all opening again? Vegas says, come on down.
Well, I doubt it. I think, some of them are going to bet on sports. A lot of that theme got into the news because things shut down and sports weren't going on, and a lot of people that bet on sports evidently switched to Robinhood because they couldn't bet on the sports games, so they started betting on stocks. And I actually went to Las Vegas 2 weeks ago. I flew there. It's the first time I've flown since the pandemic happened. First time I've been to Vegas too, and some place I've gone about twice a year for the past 15 years. And it's interesting what I saw. First of all, the airplane flights weren't. The airplanes were full, but there are less airplanes being flown at the airports. You could see that on the terminals. And the airport I left from, which is normally it's an international airport in Raleigh-Durham, it was a ghost town. This was 12 noon, and many of the stores in the airport were shut, and it appeared to be about 10% the flights as there normally would have been in the past. It was very strange. And then when I got to Las Vegas and got off the airplane, it also appeared to be very empty. Not many, the baggage claim area wasn't busy. However, when I got to the Strip on the weekend, it was packed full of people walking around. And then Monday to Thursday, it very much was fewer people there. Many of the restaurants are closed still. And I actually went to a show. It was the only show going on that whole week. It was at the New York casino. Is a Terry Fader. He's a ventriloquist, and there was hardly anyone in the audience. And there wasn't many people gambling on the slot machines. What I was told I would see is what I believe I saw, and that is many people coming from California, driving, not flying, younger people or people bringing families. They're going to Las Vegas. I think, like people where I live on the East Coast, go to the beach. You know, they're going to go to restaurants and some to drink, younger people, or to party or whatnot. And the real gambling crowd are the people that fly to Vegas. They have more money. They tend to be over 50. And also conventions, which they're not back online yet either. They're supposed to start in June. So that convention crowd, an older crowd, it really is where the gambling comes from. And to me, this experience of seeing this, I feel, the virus in the United States is fading. It will fade in different places in the rest of the world at a different rate, but things are going to improve. But in the economy is going, we got good GDP growth in the last quarter, on those headline numbers. And, but this reopening situation, it's going to last, let's say through July or August or something in the United States. But I personally have no idea, what is going to happen once that unfolds. I don't know if we're seeing a temporary, growth spurt in the economy that's just going to fade, and then we're going to get into like a stagnant situation, which is how things felt. Let's say from 2009 to 2014 or so. I mean, the economy after 2008, it did bottom out in the first half of 2009, but it did not feel like a boom at all. A lot of people still suffered, and it took a decade for the employment situation to get back to where it was before the stock market crashed in 2008. So I don't know, is this growth spurt going to continue, and things will truly rebound at an accelerated rate through the entire year, or not? And it's an important question, because it does have ramifications for what the stock market will do going into the end of the year and next year. Because if it's not going to, just grow, then it could run into more trouble later. I can't really forecast that far ahead. And as I say, I have no idea I can't predict what the real state of the economy is going to be. So I just stick to these charts, and what I see is we're in a correction now, fueled, I think too much speculation, and you got to take that out, which is what we saw a little bit in February and March. We saw it last September, and I expect, a rally, once this plays out, and then we'll have to take things from there. We'll have to evaluate things from there. So that's how I'm looking at it. And from an investment standpoint, I'm not really making any changes. I'm investing in things that I believe are going to do well no matter what the economy does. And I'm focused on commodities, energy, mining stocks, because I think the most certain trend is inflation is going to continue. We're seeing the start of it. We've seen corn prices have to be halted at limit up three times this year. And as we're speaking today, corn prices are up 3% with the stock market down. And it's not the only commodity that's doing this. And, and I think this is going to be the result of this inflationary trend. It's something like the 1970s. This is the cost of low rates, and endless deficit spending that's now poised to accelerate in a weaker dollar, in a bond market that has no functional investment purpose when you can't even, buy a 10-year treasury bond and you get a lower yield than you get from what is now a 2.6% annualized CPI, inflation. So I think inflation's the number one most reliable trend. So I'm focusing on, investing on that. And when it comes to the stock market, I'm trading, let's say, the averages, with a small amount of my money, but really focused on commodities. And in commodities, when you do have the upswings, in the commodity, complex, gold, silver, are great opportunities because you can buy these mining stocks and small cap mining stocks where you can leverage those moves, but you can't put 100% of your money into that either. You really got to spread out in different things, different stocks, and so forth.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, Janet Yellen, who's now the head of the Treasury, says she sees interest rates going up maybe slightly at some time. Does she have any control over that? Don't the markets themselves start to set interest rates?
Yeah, they do. And that's an interesting point because she made those statements, which, on the face of it, you would say, oh, no, they're going to raise rates quicker than I think. And that would be negative, right, for the stock market. But it would also be be negative for the value of bonds. And bonds are not going down today. So they're not responding to that statement as if it has any, meaningful, impact or importance to it. They're completely ignoring it, even though it's coming from the Treasury Secretary. The TLT ETF, which tracks the 20-year Treasury bond, is up today. The LQD corporate bond is up today too. So interest rates are down a little bit across the board in the bond market. So they're not trading as if what she's saying is going to have, is going to happen, basically. So I don't think it will either because I listen to the bond market.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.